Duolingo stock is down 47% in the past year. It has underperformed the S&P 500 substantially in the past 5 years. So let's see if this is a good opportunity to buy the company by looking at the fundamentals and running a discounted cash flow model to calculate the intrinsic value of the company and potential future returns. Very quickly, if you don't know what they do, Duolingo is an app that helps people learn languages through short games powered by AI. It has become extremely popular as their paid users have seen massive growth, and they are now at 11.5 million. As a consequence, they have seen amazing revenue growth as well, since it went public 6 years ago from $70 million to $964 currently. And analysts are still expecting good revenue growth in the next 3 years, as they have Duolingo reaching $1 billion this year and reach $1.5 billion in 2027. They also have very good profit growth, as Duolingo was an unprofitable company 3 years ago and they are now generating $386 million in net income. And their free cash flow is very similar, and it is currently at $354 million. And their profit is going to continue to grow very fast because they have exceptional margins, with gross margin being at 71%, profit margin currently at 40%, and free cash flow margin at 36%. The only negative aspect about their financials is share dilution. They have been issuing shares, which is horrible for investors as you own less of the company and share the profits with less people, so I really hope they stop doing this. On the other hand, a very positive aspect is that Duolingo has an exceptional balance sheet, as they have $1 billion in cash and $97 million in debt, which is nothing for a company that has a market cap of $8 billion. Either way, if you want access to stockanalysis.com, which is where I get all the stock data, grab my code in the description. Then, in order to calculate the intrinsic value of the company and potential future returns, I use a discounted cash flow model, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, according to my low assumptions, the intrinsic value is $131 per share, middle $202, and high $303. And because the stock is currently trading around $181 per share, this means that if my low assumptions occur, you would get a 4.5% annual return on your money, middle 12%, and high 19.5%. Now, as far as my assumptions, I assume Duolingo grows revenue between 8 and 16% annually for the next 7 years, the average of profit margin and free cash flow margin between 32 and 40%, and I assign the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Moreover, Duolingo is trading at a P of 22 and price to free cash flow of 23, and therefore we can conclude that the company is trading around fair value. The fundamentals look great, the balance sheet is perfect, and the valuation looks fair. So why is the stock down so much? First reason is that although they beat on revenue and earnings in their last report, they decreased booking forecasts, which has led to analysts decreasing their price target. But in my opinion, the main reason why the stock is down is because of AI competition Duolingo is facing. Companies like Google are adding AI-powered language learning tools directly into free services, such as Google Translate, which can reduce the need for dedicated apps like Duolingo. And in conclusion, while I believe Duolingo has excellent fundamentals, strong long-term growth potential, and very solid balance sheet, there is meaningful uncertainty around the future competition, particularly from AI-driven alternatives. At its current valuation, the stock does not trade at a sufficient margin of safety to compensate for that uncertainty, which is why I'm choosing to stay on the sidelines for now. I hope you found this video valuable. Let me know what you think about Duolingo stock in the comments, and I'll see you in the next one.